Good morning and welcome to IG's early morning call on Wednesday, the 20th of September. Well, coming up on today's show, the pound sterling is in focus as the UK Consumer Price Index unexpectedly eases to 6.7%, sending down the sterling, and also ahead of the Bank of England interest rate decision tomorrow. Also coming up, a big week for central banks, of course. Meanwhile, the People's Bank of China has kept the loan prime rates unchanged, as was widely expected. And then the US Federal Reserve rate decision pending too, also expected to keep rates steady. And then as well in US earnings, General Mills' earnings per share expected to decline due to elevated input costs. FedEx is also reporting tonight. Okay, well, let's start by taking a look at volatility. Let's just pull up the VIX chart to see how things are looking this morning. Well, you can see that it has risen since Friday. It's currently at around 1574 as investors position themselves ahead of the Federal Reserve rate decision later. But of course, the outcome could trigger volatility. And with 30 minutes to go until the European markets open as well, the FTSE, let's have a look at how the pre-market is looking across Europe. Well, let's first of all take a look at the FTSE. Poised to open slight higher, up 0.5%. The CAC 40 in Paris also set for a higher open, 0.40% roughly. And Germany's DAX also set for that near 0.50% open as well. So all poised to open a little bit higher this morning as global investors are noted there await the latest monetary policy decision as well from the US Federal Reserve. Well, the FTSE 100 inched up about 0.1% on Tuesday, despite as well, though, inflation concerns re-emerging on rising oil prices and caution stemming from the Federal Reserve's rate decision, as I said. But European stocks were flat on Tuesday. Well, let's have a look at how things were looking overnight in Asia, and China's loan prime rate is in focus. Well, the Nikkei 225 was down 0.66%, while Hong Kong's Hang Seng down 0.39%, and Australia's S&P ASX 200 down 0.46%, so all in the red. And how about Wall Street? Well, the three major stock indexes finished Tuesday's session mixed. The Dow Jones Industrial Average down 0.07%, the S&P 500 up marginally 0.09%, and the tech-heavy Nasdaq Composite was down 0.40%. Well, Disney slid more than 3% after announcing plans to nearly double its investment in its cruise and parks business. And also, grocery delivery stock Instacart climbed more than 12% after going live on the market yesterday. So what about today? How are the US, how's things looking? US early trade. Let's just take a look. Well, the S&P 500 poised for a slightly higher open. All session stock on the IG platform up 0.02%. The Nasdaq up marginally as well, 0.03%, and as well the Dow up 0.03%. So a marginally higher open, as I said, as investors position themselves ahead of that Federal Reserve interest rate decision. So moving on, and let's talk about China, because as expected, the People's Bank of China kept its rates unchanged this month. Well, the 1-year and 5-year loan prime rates remain at 3.45% and 4.2% respectively. And that's as policymakers assess the impact of previous easing measures. Well, latest data suggests the Chinese economy is showing signs of stabilization, yet some economists think, however, that more policy stimulus, including cuts to the loan prime rates, are likely in the coming months. Well, if we look at the US dollar, let's just have a look at how the US dollar is against the yuan, the pair up 0.11%. You know, these stimulus measures have a cost, widening yield differentials, and other economies, especially the US, weighing on the yuan. The pair is edging higher for a third consecutive day. So we'll be keeping across that. Well, also tonight, so the US Federal Reserve is widely expected to keep rates steady. Well, the Fed funds target rate range is to remain between 5.25% and 5.5%. That's what's expected. The bigger question, however, is whether the Fed is done with rate hikes. Well, if this Wednesday's decision is a given, the November meeting could be a close call, and the Federal Open Market Committee economic projections will be of particular interest. Traders are expecting, however, the central bank to begin cutting rates by September 2024. Futures pricing shows this, but bullish investors, they say, signs of ebbing consumer price pressures will keep another rate increase at bay. Well, inflation, as measured by the Fed's preferred gauge, the Personal Consumption Expenditures Price Index, has eased from its 7% peak last summer to 3.3% in July. And while resilient growth has pushed strategists to revise forecasts, however, auto worker strikes and the student loan squeeze are looming over the fourth quarter. Now, let's move on to Japan, because the trade deficit narrowed sharply compared to the same month last year. The trade deficit came in at 930.5 billion in August. A year ago, deficit was 3 times larger. Exports fell for the second straight month by 0.8%, and weak foreign demand, particularly from China. While late August, China imposed an import ban on Japanese seafood, and the food exports to China have fallen by 41.2%, the sharpest drop in 12 years. Meanwhile, imports slumped for a 5th straight month, down 17.8% year over year. Well, let's talk about UK inflation because we have figures out this morning and it unexpectedly fell in August. It came in at 6.7% year over year. The market had anticipated a 7% rise after a 6.8% rise the previous month. Meanwhile, core CPI growth slowed to 6.2% year over year. The consensus was that it would be 6.8%. But this still leaves it, of course, well, 3 times over above the UK Bank of England's inflation target. So the pressure, of course, still on the central bank, perhaps to act. So let's just have a look at the pound sterling to see how it reacted in response to that latest data, starting with the US dollar, a pair down 0.31%. So it sent the pound down against all the major currencies. The pound is also undermined by reduced bets for more aggressive policy tightening by the Bank of England there. And then this, along with the bullish sentiment surrounding the US dollar, continues to act as a headwind for the pair. And let's just have a look as well at the pound euro price chart as well. The pair up marginally 0.39%. However, against the euro, the pound fell by 0.3% immediately after the announcement, and the pound now at its lowest level against the euro since early August. But analysts say investors can expect a pound sell-off to continue today on expectations that the Bank of England will signal that lower rates are on their way at the Monetary Policy Committee's meeting tomorrow. So we'll be keeping across that. Well, in other data out this morning, Dunelm expects higher sales volumes to drive profits in 2024 after its annual profit beat analyst expectations. Well, Dunelm posted profit before tax of £192 and 7.7 million. Sales reached £1.64 billion. Dunelm proposes a final dividend of 27 pence, taking its total dividend to 42 pence. Now, in other corporate news, US earnings today. Well, General Mills is expected to report its earnings for the first quarter before the market opens. The maker of Cheerio cereals is seen posting a 2.7% decline in earnings to $1.08 per share. Revenue, meanwhile, is forecast to rise 3.5% to $4.89 billion. The bottom line continues to suffer from elevated input costs. In the fourth quarter, input cost inflation reached 9%. For 2024, General Mills expects input cost inflation of 5%. Well, if we have a quick look at the price chart, its share price has declined, as you can see, over the last 3 months. And since the end of June alone, it has lost about 20%. Well, in other news, FedEx is also due to report quarterly earnings after the market closed tonight. Well, earnings for the first fiscal quarter are expected at $3.70 per share, to be compared to $3.44 posted the same quarter a year ago, a result of FedEx cutting costs initiatives. Well, revenue is, however, expected to decline to $21.73 billion from $23.20 billion a year ago. So let's have a quick look at commodities now, because oil has had an interesting time of it recently. However, we have been seeing, if I just pull up the US crude oil price chart, and today it's down 1.04%, trading around $89 a barrel, while Brent is trading also down 1.1% at around $92 a barrel. Surprising, of course, after the rally we've been seeing with oil in recent days, but it's lost about $2.5. And that was after as well setting a fresh 10-month high yesterday afternoon. Meanwhile, API inventory data didn't impact prices much, despite a sharp drop in the crude oil stocks. Crude inventories fell by 5.25 million barrels last week, twice as much as what analysts had anticipated. Distillate stocks also fell by 250,000 barrels. Only gasoline stocks saw a rise of 730,000. Well, before we go as well, let's just have a quick look at Gold marginally higher this morning, up 0.04%. The precious metals price has risen for 3 of the last 4 trading days, though. Market players clearly waiting on the sidelines ahead of the Fed's rate decision, which could trigger volatility, of course, in the market. But that is all we've got time for today on IG's Early Morning Call. Thank you very much for watching, and do tune in for our afternoon shows and keep across our social media platforms for updates.